Good morning, traders. This is Frank Cholly with RJO Futures in Chicago, coming to you on Tuesday morning, October 2nd, with your grain market morning commentary. Currently, we have grains trading lower across the board. Corn is about 7 or 8 cents lower right now. Soybeans 28 to 30 lower, and wheat's 13 to 14 lower. In the outside markets, who cares? It's a Chinese holiday all week, and grain markets are doing their own thing right now. We have a lot of technical weakness in the market, and profit taking going on here. It all started with some harvest pressure, I believe, and then we just took out some key support levels, especially in the soybeans. Soybeans now trading about 15.29, 15.28 right in there. We took out that key 15.50, 15.55 area, and now the market may likely test $15. There is a gap in the November soybeans that goes all the way back to July 3rd to 5th. We had that holiday. We were off for the 4th, and we created a gap down there from 14.93 all the way down to 14.78. Maybe that gap needs to get filled in. It's hard to call a bottom in these corrections, but oftentimes it is just a technical level, like filling this gap, or maybe even $15. The market likes those even numbers. So where this correction ends, I'm not sure. How long will it take? I'm not sure. I don't think that the market can really go much lower than covering that gap. Extreme, I think, would be something closer to 14.50, but that's because it was so extreme on the overbought side. So we went real quickly from being overbought to somewhat oversold. But again, the market does have some downward momentum, and where it goes from here, it's hard to determine. But yesterday we got the update. Soybeans. We're talking about soybeans. Soybean harvest, 41% complete, with just 35% of the crop rated good to excellent. Now, we are seeing some improvements in the yield here, and that's helping to pressure the market. But we got to keep in mind there is a tight supply. We talked about South American soybeans. Brazil crop is really spoken for. So at some point, China comes back from vacation. China's going to buy some U.S. beans, and the prices are going to start to bounce and move higher. But right now, this correction's still well underway. Corn harvest, 54% complete, with just 25% of the crop rated good to excellent. Now, all things considered, corn's holding up pretty good. There's been so much weakness in the soybeans. You would expect a little of that pressure to spill over into the corn, but so far so good. Corn hanging in right around that 750, 745 area. 705 was the low ahead of the big quarterly report on Friday. So, $7 should probably hold up unless, we have a complete meltdown in the outside markets and, beans keep going perhaps below 14.50, but that's a wait and see situation still. So in the wheat, I've talked to you about this over and over again, wheat and corn spread. That market's moving. That's a good opportunity there. That's something you should be looking at. We have weakening, slowing demand for the wheat. Again, what we need to think about when we're talking about demand is that there's other places in the world to buy these crops, and usually, they go for, where the price is best. We have the best quality, but we don't have the lowest price. So right now there's slowing demand in the wheat. A close under 871 would turn this market more negative, and we're right around that level right now. So keep an eye on that December wheat. It's about 871. We close below this level. The technicals start to weaken there, and we can see that market slide some more. I'd say, pretty conservative level would be 850, maybe 8.25. So that's all I have time for now. Please feel free to give me a call. My number is 800-826-4124. And as always, remember that trading commodity futures does involve substantial risk of loss and is not suitable for everyone. Thank you.